Hey everybody, Brian Shannon here from alphatrends.net. It is Friday, the 15th of November, and we had some profit taking this week. Biotechs got annihilated, down 12%, semis down 8%. So let's take a look at these numbers here and make some sense of it. The S&P 500 here on the daily chart, you can see we're down to the prior band of resistance here, as well as that rising 20-day moving average. And also, if you look at the low from this month to the high this month, we came right to the 50% retracement. But there is zero evidence that this is, in fact, support. We are below a declining 5-day moving average, and to me, that means we're guilty until proven innocent. This is the chart that I show with the look that once we turn yellow, things are starting to turn neutral, and below the declining 5-day moving average, we're red. You can see that's the case for the SPY, the NASDAQ, the semiconductors, and the biotechs, which, again, got annihilated this week. We'll talk about Bitcoin in a minute here, as well as a couple other cryptos. But the equities, we had some clues that the market was slowing down. Our first bounce from the election anchor, that is that orange one there, was a nice bounce right up to the week-to-date volume-weighted average price. We got another bounce from it. And over here, I had said, the more times that support is tested, the more likely it is to fail to hold. And it did, in fact, break down. I also posted that little poster over here saying complacency is the silent enemy, be aware of where your stops are, because if we broke this level, it could lead to further selling. I thought maybe we'd come down to the month-to-date volume-weighted average price, but instead it continued to go lower, which is why I printed this shirt and have something that I always say, which is don't buy the dip. Buy strength after the dip. What is strength after the dip? Do we see that yet? Well, let's look at the very short-term time frame. We're below the daily volume-weighted average price. No, we don't have strength after the dip. That's not what I mean by that. What I'm looking for in order for, everything I talk about is meant as a swing trade. So when we have a declining 5-day moving average, and that's the black line right now, because it used to be the orange line, but I had to change the anchor from the election to orange in honor of our new president-elect. So what if we see something like this on Monday? Will that change me to bullish? No, it won't, because we will still have a declining 5-day moving average. And while that might make for a decent day trade, I'm looking more for something along the lines of this if I want to get long, that I want to see a higher high above a flat to rising 5-day moving average. That is where I would get bullish. This is not a scenario that I'm predicting. It's a potential scenario. What we might see is we might just see continued selling right down to the 50-day moving average and the anchor off of the September low. I don't have any preconceived notions about what will happen. All I know is while we're below a declining 5-day moving average, I do not trust rally attempts. If you want to day trade them, sure, you can make money. But just the same as on the long side, when we're above a rising 5-day moving average, you can make money selling short in here. But the sum of the rallies is greater than the sum of the declines. So why, if you're looking to sell short over here when the market breaks down and makes a lower low below a flat to declining 5-day moving average. Don't be a buyer when it's doing this. So going into next week, we have a couple levels of interest on the downside. Number one, as I said, is the anchor off the September low, which is where we find the 50-day moving average as well. Last time we were there, it held as support. It doesn't mean it will this time, but that's the potential level of where we might see enough demand come in. The semiconductors have dropped 61.8% of their most recent rally. That is off the November low to the November high. This is 61.8%, and it's considered a failure if it goes beyond that. So I don't really care about those numbers so much. I just look at it and say this is a bad sell-off, basically. And where did the sell-off begin? It began as it broke below this low right here. That's where we saw a lower low below a flat to declining 5-day moving average. That's when I was starting to notice we weren't seeing good long trade setups. We were getting stopped out of long positions, and it was time to look at this market and be very defensive. We blew right past the month-to-date anchor. That's only a reference point. It's not meant to be a place where we say, hey, it's going to be a buyer. This market is not showing support. We might have, slowed down here a little bit late in the afternoon, but this is not what I consider to be support. A lot of people will say, we'll look to buy the gap fill, and maybe that works. Here's what I had pointed out on Twitter earlier today, and let me just show you that chart. This is what is the NASDAQ, what's known as the measured move. And you can see that on Twitter. What I'll do is just kind of go through it here, which is the height of this move, which is 90 points, from 413 up to 503. That's 90 points. That's A to B. This is B to C. That is the corrective mode. This here, 423, add 90 points to it, and that gives us a price objective of 513. What did we hit as a high? We hit 515. So we met the measured move objective, but what's more concerning about that is this left what's known as an island reversal. And it looks very similar to the last time we saw a 90-point move. We ran up straight 90 points both of these times, and we left this island reversal, and a lot of people look for those gaps to get filled, and it might get filled, but it might take a month or two like it did this time for that gap to get filled. So we have the possibility that this market may just continue lower right down through the 50-day moving average and the anchor off the September low. It might come down to the anchor off of this low right in here. I'm not making market predictions here. I'm looking at it and saying it's guilty till proven innocent. I'm not going to go in there and throw away my hard-earned money trying to find where support is. Let the institutions do the dirty work of finding the support, creating the support, and then buy strength after it. That's going to be, I think, at the earliest, mid to late next week. The Russell 2000 gave back most of the gains from the election. Most important, though, is the psychology since the election. What was the average price, the volume-weighted average price from the election? Well, we came down and we broke below that, made that lower low below the declining 5-day moving average, and the sellers took control. Who's surprised by this? I don't understand. This is the way that markets work. I've been talking about this for 20, 30 years, really. The semiconductors, people were looking at it saying, well, I'm going to buy at the 50-day moving average. Well, the good news is it gapped below the 50-day moving average, so you didn't get a chance to lose your money for buying at the 50-day moving average. The semiconductors are in trouble. Leave them alone. There's no reason to look for them to bounce. Not yet. Not while we're below the declining 5-day moving average. We're down to the anchor off of the August low. Is that going to hold? Maybe. Maybe it's going to hit the 200-day moving average or the year-to-date anchor. Here's what is possible. Look what happened for the semiconductor, for the biotechs. The biotechs were looking like the best group to potentially lead us higher. I was bullish these things. I was thinking, hey, they're breaking out. They're getting ready to go. But I wasn't bullish without a stop. There's a big difference between bullish and bullish without a stop. Bullish is as long as we make these higher lows, we continue to hold. Breaks below that, makes a lower low below the 5-day moving average. That's my cue to exit. What's my downside objective after that? I don't have one. I just let the market tell me. I don't want to be a buyer at this cluster of volume-weighted average prices. I don't want to buy at the 200-day moving average. I don't want to buy at the year-to-date anchor. Not if there's any support. If there's, so this was 94. Was there any support at 94 at that year-to-date anchor? Was there any support at 95.25 at the 200-day moving average? None whatsoever. So why on earth do you buy these things? This thing looks like it's headed for the lows from the October 2023 lows, and that doesn't mean it's going to hold in there. The biotechs are broken. Forget about this group for a while. They're going to need to heal. Maybe they get a nice little dead cat bounce sometime next week, and you trade that on the for a short-term upside. But they are broken. Leave them alone. By the way, I wanted to mention real quick. Tomorrow's my birthday. I'm 57 years old, so I'm holding a sale for Alpha Trends. Alpha Trends, I every single day go through all the stocks that I go through for subscribers in a separate video where we talk about the reasons why we're looking at the stocks, where the stops go, etc. And 2 videos each day. Every month there are 2 webinars, 3 now with the additional subscription for Alpha Trends. So you get 3 monthly videos. You get the advanced trading course, a $500 value, the intro course, $900 value. You get a one-on-one 30-minute call with me to discuss your strategies and what you're looking for in the market. Typically, this is all valued at $2,300 and $2,322. We're taking 57%, and it's available for $998. Go to alphatrends.net. Use this coupon code to take advantage of it. Let's continue talking about this markets here. The bonds continue to get destroyed. Fed has cut rates 75 basis points from this day right here. This is the day they started cutting interest rates. What have interest rates done since that day? That day, what did I do there? That day was their first interest rate cut was right here. September. So what happened since then? Early September. Where's my TNX chart? Here we go. This is the day the Federal Reserve started cutting interest rates. The 10-year bond was at 365. Today it's at 440. The Fed does not control interest rates. The bond market controls interest rates. They might control interest rates for banks overnight, but for the interest rates that you and I are charged, that is controlled by the bond market. And the bond market continues to sell off here. Why? I don't care why. It doesn't matter to me. I just look at it and see we're below a declining 20-day moving average, which is below a declining 50-day moving average, and we've got a declining 200-day moving average. The trend is lower here. I don't care how low it goes. I don't care if it undercuts that rate level. I want to be a buyer when it does something like this, maybe. And maybe even then I wouldn't be a buyer because we've got a declining 50-day moving average. So I think you just leave bonds alone for now. Gold is something that people are talking about. We've got the anchor off of the June low, which maybe is a level of interest. And we could do a Fibonacci off of there and say, where's the, 61.8% would bring us down here. But right now, the most important thing you need to know about bond is it's making a pattern of lower highs and lower lows below a declining 5-day moving average. So just leave it alone. There's no reason to buy the dip. Let's talk about something positive. What is positive? Bitcoin is positive. Bitcoin continues to hold on to these gains. A couple weeks ago, we noted the golden cross, and I kind of made fun of it because I'm not a believer that the 50-day moving average crossing above the 200-day moving average is a bullish thing. As you know, I was long on average from 62,000. I have 20% of my position that I'm still holding. I was hoping that we would get a pullback down towards the anchor from the election. We haven't gotten that. Instead, today we just got back above the anchor from the all-time high, telling us buyers are still clearly in control. This is our more important level, 87, in terms of near-term support. We had a pattern where we had these lower highs and lower lows, but that reversed. We have a higher high. This is our higher low. Bitcoin looks like it is back on track to go to 100,000. I'm going to hold my position that I have, and hopefully we get a pullback. Selfishly, I want a pullback so that I can add to it. Ethereum has pulled back right down to the anchor from the election. I bought some there. How can I not buy some there? I bought it here this afternoon, just down at 30.64. I think I paid for it, 30.65. I don't remember. But if it breaks back below this level, I'll probably get out of it. We've got the 50-day moving average here, or is that the 200? And we've got the anchor off of the recent low down in that level as well. Solana also has been finding buyers at the anchor from the election. So you look at these markets and just add structure to them. Look at the anchored VWAPs. Look at the 5-day moving averages and say, who's in control? When the sellers are in control of a market like they are in these equities markets, there is simply no reason to be a buyer. Tesla behaves well. This is what I had sketched out last night for Tesla. I think that's the likely scenario for it. We came short of the 5-day moving average today. Maybe late next week, Tesla's ready for another rally to the upside again. But right now, it's just kind of neutral. It's nice to see that the month-to-date anchor was the exact low. But with a declining 5-day moving average, and what's going to happen to that 5-day moving average on Monday? This vertical line here is where we were 5 days ago. So in other words, we're going to average this data out of and replace it with this data. So if that happens, that 5-day moving average will decline. So I think it's most likely that we see something like this in Tesla, and then perhaps, again, late next week, we'd get rid of this data on Tuesday, so maybe late Tuesday. On Wednesday, Tesla would be worth looking at again. This is the type of analysis I go through with individual stocks for subscribers every single day. Hopefully you find value in this video and give it a like on YouTube. Join me on alphatrends.net, and I'll teach you a consistent methodology so that you can be a much better trader. That's my goal, and have a good weekend.